Hello viewers, welcome to my channel. I'm Hashim Ali Khan here. Currently, I'm giving the lectures on the subject Financial Accounting 1. In this subject, the topic is Depreciation Accounting. So I have provided so many videos on the introduction theory part of depreciation. What is depreciation? What are the characteristics of depreciation? What are the methods of calculating depreciation? Why depreciation is calculated? What are the reasons? And all these things I have explained in detail in the first introduction to depreciation. So watch the complete video to get the complete theoretical concept of depreciation. Then next video I have given for short problems, almost 8 short problems I have solved on depreciation. Then main problems, totally 7 main problems I have uploaded so far. So if you are continuously watching, you might have got a good command on the problems of depreciation. So if you are new to my channel, first time if you are on my channel, I suggest you to visit the playlist of my channel. I have uploaded the videos on number of subjects like advanced accounting, cost accounting, corporate accounting, business statistics, financial management, investment management. So many videos I have uploaded. Select your concerned subject, select your topic, watch the video, enhance your knowledge, have some confidence on the subject. Now, before starting the next problem, I expect my viewers to have a hard copy of the problems which I have provided in the link under my description. So take a printout of the problems which are given in the link and keep it ready before watching the problems. Now I'm going to start the next problem, that is problem number 8. Now, see carefully the 8th problem. Mr. Arun purchased a machine on 1st January 2004 for rupees 2 lakh. Paid customs duty and freight 50,000 and incurred erection charges 50,000. See here, any incidental expenditure directly related with purchase of asset will be capitalized. Means whatever incidental expenses like freight, customs duty, erection charges, all these will be added to the cost of the machine. In this problem, the machine was purchased on 1st January 2004. The cost is 2 lakh rupees and the freight, customs duty 50,000, erection charges 50,000. So 2 lakh plus 50,000 plus 50,000. 3 lakh rupees is the total cost of the machine. On 3 lakh, we calculate the depreciation. He purchased another machine on 1/7/2004, 1st July 2004. That means in the year 2004, we have purchased 2 machines. The first machine purchased on 1st January 2004. The second machine is purchased on 1st July 2004 for rupees 1 lakh. Now, on 1st July 2006, he sold 1/3 of the machine, first machine, for rupees 45,000. On 1st July 2006, he sold 1/3 of the machine, first machine, which was purchased on 1st January 2004. So that machine, only 1/3 of the machine we are selling, and we are selling at a price of rupees 45,000. And whenever a machine is sold, 3 entries you have to remember. And purchased another machine for 65,000. On the same date, another new machine is purchased for 65,000. Depreciation is provided by him at 25% per annum on straight line method. So depreciation, straight line method, original cost method. So 25% we calculate on original cost, and that depreciation will remain same every year. Assuming that books are closed every year on 31st December, prepare the machinery account for the years 2004 to 2007. From 1st January 2004 to 31st December 2007, we have to make the machinery account. Accounts are closed every year on 31st December. That's it. Now, see the solution here carefully. Mr. Arun machinery account, debit side, credit side, debit side, date, particulars, journal folio, JF amount. Then date, particulars, JF amount. These are the columns in the ledger account. Debit side, 2004 January 1st. To bank, cost. The cost of the machine was 2 lakh. To bank, customs duty and freight, 50,000. Again to bank, erection charges 50,000. So separately I have shown here the cost to 2 lakh, customs duty 50,000, erection charges 50,000. The total cost of the machine will become 3 lakhs. 2 lakh plus 50 plus 50. 3 lakh rupees the total cost. On this we have to provide the depreciation. In the same year 2004, on 1st July, again one more machine is purchased, second machine, to bank cost 1 lakh rupees. What date? July 1st. So in the first year 2004, two machines, 1st January, 1st July. Now we close the year. The accounts are closed on 31st December by depreciation. Now we have to provide depreciation on two machines. The first machine for full year and the second machine for half year. First machine 3 lakh. So 25% of 3 lakh, you will get 75,000. Second machine 25% of 1 lakh, 25,000. Half of 25,000, 12,500. Why half? Because purchased on 1st July. The second machine is purchased on 1st July and year ends on 31st December. So how many months? July, August, September, October, November, December. 6 months. 6 by 12. So total depreciation 75,000 plus 12,500. 87,500 is the total depreciation on both the machines. Now take the total on the debit side. Debit side total 4 lakh. From 4 lakh subtract 87,500, the balancing figure 3 lakh 12,500 by balance carried down. This is the closing balance at the end of first year. Now we'll come to the second year. 2005, January 1st. To balance brought down 3 lakh 12,500. From last year it is coming forward. Now there are no transactions of purchase or sale in 2005. There is neither purchase nor sale in 2005. So we close the year 2005. Credit side 2005 December 31st by depreciation. Now we have to provide full year depreciation on both the machines. We are following straight line method. In this case, the depreciation will remain same. First asset 2 lakh plus 1 lakh, 3 lakh. 25% of 3 lakh, 75,000. So 75,000 will remain same. Second machine cost is 1 lakh. 25% of 1 lakh, 25,000. 25. So 75,000 plus 25,000, 1 lakh rupees is the total depreciation. Take the total. 3 lakh 12,500 minus 1 lakh, 2 lakh 12,500. Carry on. That's all. So 2 years completed, 2004, 2005. Now I'm coming to 2006. So 2006, January 1st, to balance brought down 2 lakh 12,500. Now, during the year 2006, there is a sale as well as purchase of a new asset. First of all, on 1st July 2006, 1/3 of the first machine was sold. 1/3 of the first machine was sold. So whenever a machine is sold, 3 entries will be passed. The first entry is sale proceed. Bank account data to machine account. So machine account credit side by bank sale 45,000. It is given in the problem. The sale proceeds are 45,000. Secondly, we have to provide depreciation on that machine which is sold. So total depreciation for the first machine is 75,000. First machine total depreciation is 75,000. But all full machine is not sold. 1/3 of the machine is sold. 1/3 of the machine is sold. So 75,000 into 1 by 3, 25,000. 75,000 into 1 by 3, 25,000. So 25,000 is the depreciation. 25,000. But it is sold on 1st July. Half year. During the current year, the machine is used only for half year, from January 1st to July 1st. That means for 6 months. So 1/3 of the total depreciation is 25,000. 75,000 into 1 by 3. I'll show it like this. The total depreciation on first machine is 75,000. 1/3 of the machine is sold. So 75,000 into 1 by 3, 25,000. 25,000 rupees is the depreciation for 1/3 machine. Now we need half of the depreciation because only for 6 months. So 25,000 ka half, 12,500. So here I have written 25% of 1 lakh into 6 by 12. 1 lakh is the cost because the total cost is 3 lakh. Total cost of the first machine is 3 lakh. 1/3 of 3 lakh is 1 lakh. 1/3 of 3 lakh is 1 lakh. So 25% of 1 lakh into 6 by 12, 12,500. So 2 entries we have passed. First entry sale proceed, second entry depreciation. Third entry profit or loss on sale. This we have to calculate in working notes. Come to working notes. Profit or loss on sale of machine. Here I have written loss. Actually it should be profit or loss. Profit or loss on sale of machine. So first of all, cost of 1/3 of machine on 1st January 2004. Actually 1st January 2004, the total cost of machine is 3 lakh. 2 lakh plus 50,000 plus 50,000, 3 lakh. So out of 3 lakh, 1/3. So 1/3 of 3 lakh is 1 lakh. 1/3 of 3 lakh is 1 lakh. Less depreciation. First year total depreciation 75,000. First year total depreciation 75,000. 1/3 of 75,000. 1/3 of 75,000, 25,000. Second year also same 75,000. 1/3 of 75,000, 25,000. Second year also same. Third year for 6-month depreciation 12,500. 12,500. Now you add up 25 plus 12,500, 62,500 is the total depreciation on 1/3 of machine. Subtract 1 lakh minus 62,500, 37,500 is the book value on the date of sale. Book value of the machine on the date of sale is 37,500. And the sale proceed at what price it was sold? 45,000. Sale proceed is 45,000. Actually the value of that machine in the books is 37,500 and we have sold it for 45,000. So there is a profit because sale proceed is more. Sale proceeds are more than the book value. So there is a profit. How much profit? Profit on sale. 45,000 minus 37,500, 7,500 is the profit on sale. So entry will be machine account debtor to profit and loss account. So machine account should be debited. So debit side you write on to profit and loss account. Profit 7,500. Previous problems we have seen we were getting losses. The loss will be taken on credit side. Profit will be taken on debit side because the entry is machine account debtor to profit and loss account. Machine account should be debited. Over. On the same date, 1st July 2006, another machine was purchased for 65,000. So debit side to bank, 1st July to bank cost 65,000. So on 1st July 2006, one machine sold, another machine purchased. The machine sold, 3 entries we have taken here. And the machine sold, machine purchased, 1 entry we have taken. Over. Now we have to close. We have to close the year. 31st December. We have to provide depreciation. Depreciation on 3 machines. First machine 2/3. Because 1/3 of the machine is sold away. So 2/3 of the machine is remaining. So what is the total depreciation on the first machine? 75,000. Total depreciation. Out of which 1/3 is already sold. 25,000 is already gone. So 75,000 minus 25,000. So 50,000 is the depreciation on first machine. Or in other words, you can say out of 3 lakh, 1 lakh of machine was sold. 1/3 of the machine was sold. So 3 lakh into 1 by 3, 1 lakh. 2/3 of the machine is remaining. 2/3 of 3 lakh is 2 lakh. 2/3 of 3 lakh is 2 lakh. So 25% of 2 lakh is 50,000. So 50,000 is the depreciation, you can see. Depreciation 50,000 on machine 1. Machine 2. Machine 2, what is the depreciation? 25,000. 1 lakh into 25%. 25,000 is the depreciation. So first machine 50,000, second machine 25,000. Now third machine here purchased. Current year they have purchased. 65,000 rupees is the cost into 25%. Into half because it was purchased on 1st July. And we are closing the accounts on 31st December, 6 months. So first of all, 65,000 into 25%. 65,000 into 25%. You are getting 16,250. 16,250 is for 1 year. But we have to calculate for 6 months. So into 6 divided by 12, you are getting 8,125. You are getting 8,125. So I have taken 8,125 here. You can see here 8,125. So 50,000 is the machine, first machine depreciation. 25,000 is the second machine depreciation. 8,125 is the third machine depreciation. 65,000 into 25% into 6 by 12. You'll get 8,120. Total depreciation 83,125. That's it. Now, we'll find out the total on the debit side. Debit side total 2,85,000, 2,85,000, 2,85,000 minus 45,000 minus 12,500 minus 83,125. The balancing figure 1,44,375. This is the closing value of machinery at the end of the third year, 2005. Now we'll come to 2006. This is the end at the end of 2006. Now we'll come to the 2007. 2007 January 1st, buy balance brought down. This is carried down, here it is brought down. There are no purchase or sale of machine during the year 2007. No purchase, no sale. So directly we close the year 31st December 2007 by depreciation. First machine depreciation is 50,000. Second machine depreciation is 25,000. 25% of 1 lakh, 25,000. Third machine purchase 65,000. 65,000 into 25%, you get 16,250. 65% into 25%. 65,000 into 25%, 16,250. Add up, 91,250 is the total depreciation on the 3 machines. Now we take the total debit side, 1,44,375 minus 91,250, 53,125 is the balancing figure. This is the closing balance as on 31st December 2007. Now we'll come to the next year, 2008. 2008 January 1st to balance brought on 53,125. So it is asking you to prepare the machinery account from 1st January 2004 to 31st December 2007. So we have completed up to 31st December 2007. That's it. So this is the end of problem number 8. Now we'll start the next problem, problem number 9. See the problem carefully. A company whose accounting year is calendar year. Calendar year means beginning from 1st January and ending on 31st December. So purchased on 1st April 2004, machinery costing rupees 3 lakh. The first machine is purchased on 1st April 2004. The cost of the machine 3 lakh. It purchased further machinery on 1st October 2004, costing rupees 2 lakh. So during the year 2004, 2 machines are purchased. The first machine is purchased on 1st April and second machine is purchased on 1st October 2004. First machine 3 lakh, second machine 2 lakh. On 1st January 2006, 1/3 of the machinery installed on 1st April 2004 became obsolete and was sold for rupees 30,000. So this sale took place on 1st January 2006. Actually, first machine was purchased on 1st April 2004. So we have to complete 2004, we have to complete 2005. Then in 2006, there is a sale of machine. Depreciation is being written off on fixed installment system at 10% per annum. Fixed installment system means original cost method or straight line method. In this method, the annual depreciation will remain same. That is 10% on original cost. Then prepare machinery account as would appear in the ledger of the company for the year 2004 to 2006. So we have to make the ledger account for 2004, 5 and 6. 3 years accounts we have to make. Now see carefully here. Machinery account, debit, credit. Debit side, 2004 April 1st to bank, cost 3 lakh. Then October 1st, same year, 2004 October 1st to bank, cost 2 lakh. So in the year 2004, 2 machines are purchased. First machine 3 lakh, second machine 2 lakh. First machine purchased on 1st April, second machine purchased on 1st October. Now we close the year, 31st December 2004. Calendar year closes. By depreciation. Now we have to provide depreciation 10% on original cost, 3 lakh. 3 lakh into 10%, 30,000. But 30,000 for 1 year. The machine is purchased on April 1 and we are closing the accounts on 31st December. So from 1st April to 31st December, 9 months. April, May, June, July, August, September, October, November, December, 9 months. So we have to calculate depreciation for 9 months. So you can see here the calculation, 10% of 3 lakh into 9 by 12. 10% of 3 lakhs into 9 by 12, you will get 22,500. Similarly, 10% of 2 lakh into 3 by 12. Why 3 by 12? Because it is purchased on 1st October. October, November, December, only 3 months. So 3 by 12. So 10% of 2 lakh into 3 by 12, we are getting 5,000. So 22,500 plus 5,000, 27,500 is the total depreciation for the first year. Now take the total on the debit side, 5 lakh. 5 lakh minus 27,500, you will get 4 lakh 72,500. This is the closing balance of machinery account at the end of first year, 2004. Now we'll come to the 2005. Debit side, to balance brought down from previous year, 4 lakh 72,500. From here it is carried down, here it is brought down. 4 lakh 72,500. Now there are no transaction, there is no purchase, no sale during the year 2005. So we close the year 2005. 2005 December 31st by depreciation. Now we have to calculate full year depreciation. Full year depreciation for both the machines. It is given in the problem 10% on original cost method. So 10% of 30,000. Sorry, 10% of 3 lakh, 30,000. 10% of 2 lakhs, 20,000. So 30,000 is the depreciation for first machine, 20,000 is the depreciation for the second machine. Total depreciation 50,000. Take the total 4,72,500. From 4,72,500 subtract 50,000, 4,22,500. So 4,22,500 is the closing balance of machinery account at the end of second year, 2005. Now we'll come to the last year, 2006. 2006 January 1st, to balance brought down 4,22,500. Now on the same date, 1st January 2006, 1/3 of the machine which was purchased on 1st April 2004 was obsolete and was sold away. So on which date it was sold? On January 1st 2006. That means during the year 2006 the machine is not used. On the first day itself the machine is sold. So whenever a machine is sold, 3 entries will be passed. The first entry will be sale proceed. So by bank, sales. 2006 January 1st, by bank, sale, 30,000. 30,000 rupees the sale proceed given in the problem. Second entry will be depreciation. But there is no depreciation because during this year the machine is not used. In 2006 year, the machine is not used because on the same date, 1st January itself the machine is sold. So depreciation will not be there by depreciation dash. Now we have to find out there is profit or loss. That we have to do it in working notes. So in working notes, profit or loss on sale of machine, cost of 1/3 of machine on 1/4/2004. Actually the complete machinery is not sold. Only 1/3 of the part of the machinery is sold. What is the total cost of machinery on 1/4/2004? 3 lakh. 1/4/2004, 3 lakh. So 3 lakh into 1/3, 1/3. So 1 lakh rupees is the cost. From this 1 lakh, deduct depreciation. 1/3 of total depreciation will take. What is the total depreciation of first machine during the first year? 22,500. 22,500 is the total depreciation on first machine, total. But we need 1/3 because all the machine is not sold. 1/3 machine is sold. So 22,500 into 1/3. 22,500 into 1/3, 7,500. Similarly, second machine. The second machine total depreciation is 20,000. 20,000. Sorry. Second year. Second year total depreciation is 30,000. Total depreciation is 30,000 in the second year on the first machine. But we need 1/3. We need 1/3. So 30,000 into 1/3. 30,000 into 1/3, 10,000. So we are calculating the depreciation for 1/3 of the machine purchased on 1st April. This machine, not this machine. This machine. So on the first machine, the total depreciation during first year 22,500 इसका 1/3 लेंगे. Second year, the total depreciation on first machine 30,000 इसका 1/3 लेंगे. So 30,000 का 1/3, 10,000. So 7,500 plus 10,000, 17,500 is the total depreciation on 1/3 of the machine. So 1 lakh minus 17,500, 82,500 is the book value of machine on the date of sale. Now this book value of the machine was sold for 30,000. Sale proceed 30,000. So actually in the books of accounts the value is 82,500, but we have sold it for 30,000. So there is a loss. Loss on sale of machine, 82,500 minus 30,000, 52,500 is the loss. The entry will be profit and loss account debtor to machinery account. So machinery account should be credited by profit and loss account, loss 52,500. That's it. So these are the entries on 1st January on the date of sale. There is no purchase. Now we have to close the year, 31st December. 31st December 2006. Now we have to provide depreciation. Depreciation on the remaining machine. First machine, 1/3 of the machine was sold, but 2/3 of the machine is remaining. 2/3 of the machine is remaining. So what is the total depreciation here? For this one, total depreciation is 30,000. 10% of 3 lakh. 10% of 3 lakh, 30,000. But 1/3 of the machine is gone. 2/3. So 2/3 of 30,000 is 20,000. Or in other words, like this you can say, out of 3 lakh, 1 lakh rupees worth of machine was sold away. 1/3 of the machine was sold away. So 3 lakh into 1 by 3, 1 lakh. So 1 lakh worth of machine was sold. So remaining machine how much? 2 lakh. Remaining machine 2 lakh. So 2 lakh into 10%, 20,000. So 20,000 is the depreciation on the first machine. Second machine depreciation, 2 lakh. 2 lakh into 10%, 20,000. So 20,000 is the depreciation on the second machine. The total depreciation will be 40,000. Now take the total on the debit side, 4,22,500. 4,22,500 minus 30,000 minus 52,500 minus 40,000. You will get 3 lakh rupees by balance carried down. This is the closing balance of machinery account at the end of the third year, that is 2006. On 31st December 2006, the closing value of machinery is 3 lakh. Next year 2007, January 1st, 2 balance brought down 3 lakh. That's it. So it is asking you to prepare the machinery account for the first 3 years, 2004, 5, 6. So we have prepared the 3 accounts. Come on, now we'll start the next problem, problem number 10. Orange Transport Company purchased 10 trucks at rupees 4,50,000 each on 1st April 2009. So this transport company has purchased 10 trucks. Each truck cost 4,50,000. So 4,50,000 into 10, 45 lakh rupees is the total value, total cost of all the 10 trucks. This was purchased on 1st April 2009. On 1st October 2011, one of the truck is involved in an accident and completely destroyed. 2,70,000 rupees is received from the insurance company in full settlement. So on the date 1st October 2011, one of the truck met with an accident and insurance company has given the claim amount of rupees 2,70,000. And on the same date, another truck was purchased by the company for rupees 5 lakh. The company writes off 20% per annum on the original cost and observe calendar year as its financial year. So the method of depreciation is 20% per annum on original cost method. Original cost method means straight line method. The annual depreciation will remain same. So every year accounts are closed on 31st December, calendar year they are following. Prepare the motor trucks account for 3 years. Ultimately, we have to make the motor truck account for 3 years. First of all, trucks account, debit particulars JF amount, debit particulars general folio amount. Now, 1st April 2009, the 10 trucks are purchased on 1st April 2009. So each truck cost 4,50,000. So 4,50,000 into 10, 45 lakh. So to bank cost 45 lakh rupees. Now we'll close the year. 31st December we are closing the year. So 2009 December 31st by depreciation. So 20% of 45 lakh into 9 by 12. Because the trucks are purchased on 1st April and we are closing the accounts on 31st December. So from 1st April to 31st December, 9 months. So 20% of 45 lakhs into 9 by 12, you will get 6,75,000 depreciation for the first year. Now balance. Take the total debit side, 45 lakh minus 6,75,000. 38,25,000 is the closing balance of the value of all trucks at the end of first year, 2009. Next comes 2010. So 2010 January 1st to balance brought down 38,25,000, brought down from last year. Now there is no purchase, no sale, no accident in the second year. 2010 no purchase, no sale, no accident. So we'll close the year. So 31st December 2010, December 31st by depreciation. So 20% of 45 lakh, original cost method. Original cost method means the original cost 10%, 20%. So 20% of 45 lakh, 9 lakh rupees is the total depreciation on all the trucks, second year. Take the total debit side, 38,25,000. 38,25,000 minus 9 lakh, 29,25,000. This is the closing balance at the end of the second year. Now we are coming to the third year, 2011 January 1st. 2011 January 1st brought down to balance brought down 29,25,000. Now in this year 2011, on 1st October, one of the truck met with an accident and the insurance company has given the claim amount of rupees 2,70,000. 3 entries will pass. The first entry will be amount received from the insurance company for the claim. Entry, bank account data to trucks account. Just like sale entry. Just like sale entry, we are receiving the proceeds from the insurance company. The bank account data to trucks account. So by bank. Insurance claim. How much received? 2,70,000. The second entry will be depreciation. Depreciation on that truck which was met with an accident. So by depreciation. So what is the rate of depreciation? 20% of 4,50,000 into 9 by 12. Because the accident took place on 1st October. We are starting the year from 1st January. So 1st January to 1st October, 9 months. So 20% of 4,50,000 into 9 by 12, 67,500 rupees is the depreciation of that truck during the year 2011. Now we have to find out whether there is profit or loss on this truck. So in working note, cost of the truck on 1st April 2009 at the time of purchase, the cost is 4,50,000. From this, we subtract depreciation for the first year up to 31st December 2009. 31st December 2009. So 20% of 4,50,000 into 9 by 12, 67,500. 67,500 is the depreciation on that truck, one truck for 2009. Now 2010. Depreciation for the year 31st December 2010. So 20% of 4,50,000, 90,000. So for the year 2010, 90,000 is the depreciation. Now 2011, depreciation up to 1st October 2011, date of accident. So 20% of 4,50,000 into 9 by 12. Because our year begins from 1st April and 1st January and the accident took place on 1st October, 9 months. So 9 months depreciation, 67,500. Subtract 67,500. 2,25,000 is the book value of the truck on the date of accident. But we have received from the insurance company 2,70,000. We got from insurance company 2,70,000. So there is a profit of rupees 45,000. So entry will be trucks account data to profit and loss account. So trucks account debit side to profit and loss account 45,000. So we have taken to profit and loss account profit 45,000. On the same date, one more new truck was purchased. So debit side to bank cost 5 lakh rupees. On the same date, October 1st. That's all. Now we close the year 2011. 31st December 2011. So here, December 31st by depreciation. Now we have to provide depreciation on 9 trucks. See here, the total number of trucks are 10 at the time of purchase. But what one truck was destroyed, lost. So totally 9 trucks we have. So 4,50,000 into 9, you will get 40,50,000. 40,50,000 is the cost of 9 trucks. So 20% of 40,50,000, you will get 8,10,000. 8 lakh 10,000. Now 20% of 5 lakh, the new truck purchased now during the current year. So 20% of 5 lakh into 3 by 12, because we have purchased on 1st October. So October, November, December, only 3 months. So 20% of 5 lakh into 3 by 12, you will get 25,000. So 8 lakh 10,000 plus 25,000, 8 lakh 35,000. So 8 lakh 35,000 is the depreciation for the current year. Now take the total on the debit side. 34 lakh 70,000 is the total on the debit side. So 34 lakh 70,000 minus 2 lakh 70,000 minus 67,500 minus 8 lakh 35,000. The balancing figure 22 lakh 97,500. So 22 lakh 97,500 is the closing balance of all the trucks at the end of the third year. Now 2012, January 1st, to balance brought down 22 lakh 97,500. So it is asking you to prepare the trucks account for 3 years. So we have completed 3 years, 2009, 2010, 2011. That's all. So this is the end of problem number 10. So far we have completed 10 problems. I have explained each point in detail. Still, if you are unable to understand, rewind the video, again you watch it. Then definitely you can be able to get the command. So if you are satisfied with my lecture, give a like to the video. Give your special comments regarding these lectures. Share it in your group, in your circle, so that more students can be able to get the knowledge from these videos. And subscribe if you have not yet subscribed my channel. We'll continue this in the next video, the next problem.